Here are the biggest headlines from last week that you probably missed. Hey, I'm John B. I tell you the truth about mortgage and finance, and that's why you follow me. Let's jump right into it. Home prices saw a dip last month of about 1/3%, but they're still about 6% higher than they were this time a year ago. So even though we've seen a slight downturn recently, mostly as a result of mortgage rate increases, prices and the overall market are pretty strong. In the rental market, year-over-year rate increases have continued to decline from their highs last year. That's good news for anyone that hasn't been able to get into the purchase market lately. However, as corporations continue to buy up single-family rental properties, that downward trend could reverse pretty quickly. Across the pond, we've seen inflation rates in Europe start to come down. However, key indicators have signaled toward more rate increases this year. That could mean the same thing for here in the US, and we'll know more about that as numbers come out later this month. Back home, several Federal Reserve statements point toward a 0.25% interest rate hike at their meeting later this month, and that rates are likely to remain elevated through 2024. The good news is that means they think a recession is potentially less likely. The bad news is we may be dealing with these higher interest rates for longer than we expected. And speaking of rates, they were unfortunately up again last week. This caused the number of new mortgage applications to drop to 28-year lows. So we're waiting for some good news this week, so rates may be able to turn back around. We've got Federal Reserve Chair Chair Powell testifying in front of the Senate. We've also got a report on consumer credit coming in, and they'll be announcing the unemployment rate toward the end of the week. Fingers crossed we'll get the news we want. Make sure to follow me to stay up to date.